want you to listen to the sound of my voice just as if it were noise. Don't try to make any sense out of what I'm saying, because your brain will take care of that automatically. You don't have to try to understand anything. Just listen to the sound. As you hear sounds coming up in your head, you simply listen to them as part of the general noise going on, and soon you will find that the so-called outside world and the so-called inside world come together, come together, come together, come together, come together. They are a happening, and everything is simply a happening.
Awesome. Let me get the contract.
Okay, what's going on? What's going on here? Let me pull up a couple things here really quick. And what we're going to do is we're going to go through the top-down analysis of what we were looking for from a higher time frame perspective. And then as well, we're going to go over the entries that I took today and just some of the management. So let me do a couple things here really quick. Okay. Oh, there we go. Just so I can see this chat here really quick. Okay, cool. So this will be recorded, but you know, for me, when you're looking at a news type of day, the price is going to be a little bit different than normal. It's not going to be as volatile. It's not going to push the same as it normally would, right? A lot of the times price will just extend and go crazy and push, 150, 200 points sometimes in a day. And sometimes in situations, recently we've been seeing price even push, 300, 400, 500 handles in one day. Okay, so I'll go over to the higher time frame here really quick to kind of give you guys the higher time frame context, and then I'll show you the entries that I posted inside the Telegram. So if you guys aren't in the free Telegram, definitely join the free Telegram. This version that I have currently right now under the Ricky Trades Telegram is just an update of my actual personal trades. So if you go and let's look at that really quick so you guys have an idea. Okay. So if you look at it, obviously I'm updating on all the trades that I take. So if I also usually drop like a pre-market analysis going over like what we're expecting. And so when you look at it, I actually took a trade pre-New York today because of, like I said, that time being condensed in the market closing at around noon. I like to have that position and get out, as soon as possible. I don't really have to stick around all day. But 8:13 a.m. as you can see right here is when I took that first short down, covered some of the position, which I'm going to go over that, like the actual breakdown of that trade. And then we ended up winning that trade pre-New York, right? And then New York ended up setting up a buy potential back up to the market open, which like I said, I'll go over that as well. And then there was a couple of other opportunities that I seen, some R&R setups throughout the day. Now, still wasn't the most pushes that I would see, except that very first push, but there were some really good opportunities in there. So I'll go over this one, like I said, that's here, basically when we took the shorts down, how we covered it, etc. And then the second half of the day situations, okay? And so when we look at this higher time frame, something I like to understand and have an understanding of is what's high and what's low, right? And so if you look at the previous days, and like these dots that you're seeing here, these are just areas of New York opens. So like I'll have to mark today's, but these purple boxes are basically where they manipulate it at the New York open, right? So if it's red, it's going to be a bearish, open, and price went bearish at the open. It was pretty self-explanatory and easy. If it's blue, then that's usually a buy day. But if it was purple, like you see here, or you see here from last Wednesday, last Thursday, those were manipulations one way and then price reversed, right? So I like to identify those and understand what we were looking at. So when you're looking at how the day started, the day actually starts here. All right, so I'm gonna turn this off really quick. The day actually starts here, so your market open, right? So your Sunday open was here. Price basically comes up, makes that new high, high or low, then goes and makes another high, looking like it wants to maybe go press that previous day high during the overnight session. And then overnight session ended up making a high of day, right? So this would have been 3 a.m. going into 4 a.m. Price makes that lower high and fails to ever go back and close higher and push through that previous day low. And then we come into New York session, and this is what we can see. We don't see this 8 a.m. to 9 drop that falls below these levels here. All we essentially can see coming into New York open was this. All right, so if you're looking at it from here, all you essentially could see at 7 a.m., right, 7 to 8 a.m. was this. Right, so you can see, I call it trend line liquidity, right? Sell side or buyer's liquidity on the way up. The overnight buyer was in a profit, so I like to attack the individual that plays that overnight quite a bit. And so for me, what I wanted to see happen at New York or even pre-New York, because like I said, it's a shorter day, was that we were going to distribute down from 24,900 and go back below 24,800 market, possibly the low of day, and then reach into this 700 level where I had identified a 5 to 1 R multiple setup. And so in this situation here, this is all you could see, and then New York ends up happening and we end up playing this position. So now when you go and you look at pre-New York, which I'll go over onto a 15.5, then that's when we started to take the positions here at my key level 24,850. But the overall bias and understanding is like this is low to me, right? This is the monthly low for February. This essentially is going to be the monthly high. And so this is our range, right? This is our daily range, right? So this is a daily low, these are the daily highs, this is the 4-hour lows, 4-hour highs. So you want to be thinking premium and discount, right? So if that kind of helps you see it this way, what I'll do, because I do have a lot of the price levels here, because I've played a lot of different levels and I like to look at specific levels on higher time frames. But one thing you can look at when you're doing this is to use your Fibonacci retracement tool, and you take the previous low to this high and just have an understanding of where that 50% is, right? So 50% of the range, so from this low here to this high here, 50% was that key level area. So if I was telling myself like on a daily 4-hour and a 1 hour, if I wasn't seeing body closures above that key level, which was 24,850, then I wanted to see price roll over potentially here to previous day low and maybe even down to 24,500. And so that's the higher time frame context. It was only that either we were going to respect that 50 and go lower if we were bearish, and if we were going to go bullish, we were going to respond and close bodies above this body here in 24,950, and then so basically come up like this and then make our way up and start to go back into that previous area of imbalance, fair value, etc., right? The expansion. And so by seeing that we weren't closing above there, pre-New York, which this would have been 7 a.m. to 8, so this candle right here, I kind of pretty much already had an idea that they were going to take out the trendline trader, okay? And so that was my bias coming into it. Now, when we look at a smaller time frame, right, more intraday, 15.5, H1, etc., you can see here, I just want to see if this clicks over pretty good. You can see here essentially, and I just want to give it a second here to switch. But essentially you can see here, right, that's that level that we were talking about, 24,850, which was my key level. So the trade that I first took going into New York was I wanted to see the sell down. Now this wasn't my best entry because a lot of the times I like to get trades inside these last up candle pushes, so stuff like this candle here on a 15, and then relating that over to the 5-minute. Now the only thing is I personally don't usually take trades at like a 7:30 or anything like that, but like 8 a.m. and at like 8:25, if the edge is presenting itself, right? One thing I have here on my desk that I'm really focused on, like some of my goals for the week, is to act on your edge without reservation or hesitation, right? So when the edge presents itself, I'm taking the trade and letting the numbers be the numbers. Now, what makes these a little bit more high probable when I take these trades is when I have specific targets of liquidity, and understanding of where, using point of interest and understanding where a lot of players' orders and stop losses are building up. So for me, when I was coming into this, the current low of day at the moment was this level here, basically 24,792s, or excuse me, 24,755s. And so what I was really looking at and had my eyes glued to coming into this on a 15.5 was these lows here, right? So in that overnight session, like this would have been like 1:30, almost 12:30 going into like 1 a.m. right here. Price had set a nice low here and then started to make its way up to then break higher, right? And so what I was anticipating and thinking is that if I were in this position, right, where would I place my risk? And most of the time I'm going to place it under the old low and trail it up as it moves in my favor, right? But a lot of people's risk, they're just waiting and sitting and hoping and dreaming or whatever. They're going to leave it in this area, okay? And so when I came into this, I was wanting to wait till 8:30, but the position was just, it was just sitting there, right, like in the last 15 minutes of the hour. Now that's another thing is I'll take a trade in the first 15 or last 15 minutes of an hour. So in this situation here, this actually worked out into the timing of the trades I like to take. Now, as you can see, they came up and they respected that 625 candle, right, which was also the 15-minute fast up candle. And then again, they came up and they failed to make a new high. So like right here, they were supposed to go up, make a new high, and start to build and then continue up. And essentially right here, what you end up seeing instead was a lower high, and price starts to break down. And now when you start to really look at this area we were talking about, it becomes a target, right? So when I talk about R multiples, what I'm essentially saying is, and like I said, I have a video coming out on Wednesday that's going to go over risk reward ratio, and then my specific risk reward ratio for the NQ trades that I take. And so what I like to do is I personally like to risk 20 handles, so 20 points per trade, right? And I usually use about 4 contracts, so it's about $8 a move. So every 10 points, right, if it's $8 a move, it's an $80 risk. And then if I risk 20 points, right, that's going to be about $160 per trade, right? And round up because of locations and stuff like that, it's like $200 a trade, but essentially it's about 160 even. And so what I was looking for in this situation here was we ended up getting price, right, 745 to 750, price closed and breaks lower, and it's now the 5-minute bodies are closing lower. All I was saying is I wanted to see price respect from here down to here. So to kind of give you an example of what it looked like, it was this candle closes at 745 to 750, this candle opens, and basically this 24,850 level I was looking to play here, and I was looking for a 1 to 3 R, right, or 3 to 1 R. I gotta switch those, and I want to make sure they show up on both screens here really quick. So I was looking for a 3 to 1 R, right? So this situation here, like I said, you had the candle closed, you had this candle open, and then I was looking for that 3 to 1. Right now, as you can see, when I put that up, right, you can see that my risk is 20 handles already preset, and my TP is 60, right? Because we're thinking in R multiples. And so also what I really like to see was that when I have my take profits, I want them to be in alignment with breaks of structure, right? So like this was a really good push down that was going to be breaking that structure going lower. Now, my goal for the week, which I'll go over more on the Wednesday video, but my goal for the week is just to really focus on, playing my R multiples. And so what I want to do personally is I shoot for 1 to 5R, right? But then what I do at a specific area, so like a 1 to 3, is I actually manage that trade to secure a profit. And so like it looks like this when you start off, right? And then I also have that 1 to 3 understanding of like where that is. And so now I'll go back to the replay mode and kind of show you how it played out. Now what I'm going over is the trade I showed in the Telegram, right? The actual trade that I took. And so on the replay mode, we'll do it here on the 5-minute because that's like the better spot to do it. So this is what it would have looked like here. Is took the trade like right here. Right. And then we had one candle print. Which one was this? This was 750. So essentially, let's just say that we got in here, traded. We had 4 contracts, right, to the sell side, right? Market order or market hit right here. So bam, we had 4 right here. Now what I did essentially here was I had my risk, 20 handles no matter what, right? Because the predetermined risk is the most important part, right? You want to make sure that you have that predetermined risk is very important. So now our entry was, let's say here on this setup. So I'm just trying to make sure I'm framing it exactly right. Because you want to be able to eyeball this and know when to get out of this trade. Okay, so now what you're looking at is that's that low there on the 15 and on the 5. And what I'm basically telling myself here, because it's a news day, is that I want to secure the bag, right? I don't want to potentially it not work out, or whatever it could be. It just not play out. You may not get the volatility that you're used to seeing, like a previous day low, or like a new high on day or something like that to deliver. So you're looking to go from A to B. And so in this situation here, I have a 5 to 1. So let me go ahead and make sure it's right here. And then this one should be a 1 to 3. Okay. And so essentially right here, this is going to be, let me do this here as well. Now when I have the replay mode on, that's the only thing that makes it a little difficult on this one. But okay, so we have that 5 to 1, right? And then we have the 3 to 1, right? So 5 to 1 is the overall target. 3 to 1 is where I'm going to start evaluating, because there's a break of structure, and that is a grab of liquidity. So now I'm going to pull that TP on the 4 contracts all the way down to my 5 to 1, which was the $800 profit across the accounts, which would be insane. Now, the one thing I did do that really helps with the trade management, like I said, I'm going to go a lot more over this on the Wednesday video breaking down these actual rules, is I have my entry and I have my area of interest that I want to shave some profits. Now, what I told myself this week in my plan is if I'm looking for 5 to 1, when I get to 3 to 1, I'm cutting half the volume and going break even. That's my plan, right? So by knowing that, when you come in here, right, and I already know I want to do that, then I just need to put a limit, right? I'm going to sell, so I need to put a buy limit, and I only want to take half the volume, so 2 contracts, right? Now, when I do that, I want to move that down exactly to the 1 to 3, okay? And so the 1 to 3 was right here, right? And so by doing this, now I'm going to go ahead and, when the market goes through that area, I'm going to go ahead and secure a 1.5 R, if that makes sense. My goal was to get 5 to 1, right? But essentially when I'm doing this and I'm moving half of it, because half of 3, right, with my volume, half of 3 is 1.5, I'm securing 1.5 R. Now in any given trade, I'm usually risking 1 R. So I'm already making a little bit more than what I'm usually risking per trade, okay? And so when this trade plays out, we'll go through this here really quick. Oh, I think I have to actually push the button, sorry. And so did we buy those 2 there? Okay. Okay, so now we have the buy limit set. So no matter what, when price runs through that area, right, that 15 5-minute low, that break of structure, it's going to go ahead and pull half my volume off, all right? So this is what it looked like. Price started to go down. Price definitely in our favor, right? Price starting to deliver. Bam. Now you see how it takes off at least 2 of the contracts that I was in. At this exact moment, what I did and what I do, right, is I go ahead, since it delivered me some profit there, I go ahead and trail that risk to break even, and I'm now shooting still for the 1 to 5, right? But now remember, I've cut my volume in half, so half of 5 is 2.5. Right? But I've already secured 1.5. And my goal for the week, on average for my days, I want to finish with what's called 4R. All right, so I've already secured 1.5, right, R. And then when this trade was to go to the final TP, which it does like right before New York Open, I'm looking to get 5R, but because I've cut the volume in half, I'm looking at 2.5 plus 1.5, right? So that's going to give me what? 4R goal, all right? And so now price continues to go down. All right, I know this replay mode is kind of trash, but price continues to go down, and we're coming into New York equities open here. This is 820 to 825, and then 825 to 830, right, was here. And now we're about to have equities open, and we're about to deliver a target. Bam, target delivered, okay? And so now we've secured the 1.5 and we secured the 2.5 R on the day, and essentially we're done, right? And so now from this point, because I still seen that there was opportunities after this, I'm not gonna have to think hard on what I'm gonna risk, right? Essentially, what I'm gonna risk, because I only risk 1 R per trade, right? I'm gonna come in and maybe take one more trade and risk 1 R of the 4 that I have for the day, if that makes sense. 1.5 here, 2.5 here, makes 4R. Now I can risk 1R if I take one more setup, right? And that's how the beginning of the trade's set up. Now, you guys always probably see me talk about capitulation bounce plays, right? And understanding that if people short pre-New York, right, why do we look for if it falls off fast and then price was to buy back up? And it's because of situations and individuals like myself in this situation here, is that when I'm covering and setting limits in these areas, that's why buys usually fill and blast a lot of the times, right? But that was a really clean, 4R setup. I mean, that's sometimes that's really all you need. And then when you go and we look at later in the day here, there was a beautiful buy right after that position. So now if we look at the 1 minute and we go to when individuals took profit on that position, I ended up finding a buy position on the way back up because my TPs were already hit, right? And so when you look at it on that 1 minute, there was that 5-minute area. We had delivered liquidity. I believe right here, this was 8:30 to 8:35. We delivered my TP, and then we had 8:35 to 8:40, 5-minute lower open, lower close. Then we had 8:40 to 8:45, lower open, lower close. But think about this. This is the last 15 minutes of the hour, right? Now you gotta also think individuals have been shorting the market from 24,900, and those individuals got to cover to make a profit, right? Because we're so oversold in my eyes, right? And so at this point, there was another beautiful R multiple setup, right? And so down candle was the last down candle was here, 46 to 47, and then you had this engulfing candle. So the reason why I like this area was because playing from here back up to here, right, was a beautiful R multiple, right? There was another 1 to 5 that I basically could identify. And so for me, what I ended up doing was I ended up finding a position here, right? And now I already have my stuff preset, which is very helpful. So that way I don't have to think about where I'm gonna place my risk. And I'm looking for a 1 to 5 setup. Now that's well above the market open. I have a few mantra rules that I follow. Protect or pay yourself at point of interest, and one of the point of interest here is going to be the market open. And so in this situation here, the other thing that we're looking for is we're looking for that 1 to 5 to deliver. But one thing I'll say as well is I'm managing something at 1 to 3, right? So for example here, when price is at that 1 to 3R, I played it the exact same way I played the position I just showed before, right? So for example, price is here. I bought in with 4 contracts, right? So market buy, 4 contracts, right? Stop loss goes exactly to what it says, right? So 166 here, and then our TP was set for the 1 to 5. Okay, so I'm going to show you how I manage this. So TP is set for a 1 to 5, and when price delivers, let me make sure I have the right here. Okay, make sure that's all lined up because I have it all lined up. Okay. And now all I'm doing is just make another box to show where the 1 to 3 is, because as you get better at this, you're gonna see it for yourself. But even me doing this now 7 years, I'm gonna use the boxes just to be safe. Okay, so 1 to 3 here is where you're set. And now, so if price, what happens is if I'm looking for that 1 to 5 setup, right, and price doesn't go up and end up delivering that 1 to 5, when price gets to the 1 to 3, right? So as we start to push, we're starting to go in favor, right? And a lot of times I used to take trades like this and go break even way too fast or start to trail the risk way too fast. You gotta let the probabilities play, okay? And so price goes up to above that 750 level, right? So we're starting to push into that 1 to 3 area right here. Now, what I had already done was the same thing I did on that sell. I had already had it preset. So on this area here, let's say I had, I'm in a buy. So I had limits to sell 2 contracts here, right? So sell, limit, 2 contracts, right? And then I had that set to sell at exactly the 1 to 3 mark, okay? Right, so what that's essentially doing is it's putting me psychologically in a profit, right? It's putting me in a profit, and then as soon as that area is delivered, I'm going to break even on the remainder to still shoot for the for the 5R. But remember, I've reduced down the volume of the trade, right? If it hits this area here like this, so let's kind of go through this really quick. Bam, so it's reduced my volume down. Now I'm still shooting for the 1 to 5, right? But I've already secured a bag. But at the same time, as soon as you secure that 1 to 3 partial, then you want to go break even on the remainder of this setup, because you don't know if it's going to reach for that 1 to 5R or not. And this example is a good example because I believe it didn't, right? So it got close to getting up there, and then it sputtered out here once we got into the market open, right? And so before I was like, oh yeah, well sometimes like I trail risk here, but a lot of times if a market's truly bullish and it makes it to the 1 to 5 here, what I'm gonna do is I'm gonna trail from break even to 2R behind whatever I'm looking for, right? So for example, if this was to go ahead and make it to the 1 to 5 and I was already break even and I'd already partialed, what I'm gonna do is I'm gonna follow behind by 2R. So that'd be basically putting myself, like price would shoot up to my area here, then I'm gonna drag this stop loss up to like a 1 to 3, and then just trail the market as it continues to go. But as you see here, price does not go to that 1 to 5 and it starts to roll over before it can go above the 800 level, right? And so I just had to accept the remainder, which was a stop loss break even on the remainder, but I still was able to secure $300 across the 5 accounts, which is fire. Okay, so what my system does, and you'll see in the video on Wednesday, is that it helps you minimize your risk, but maximize your profit potential, right? And it also does it in a way to where you're not freaking out and capitulating in your emotions as you're doing it. And so yes, price does come all the way back down here in this situation. And sometimes, like I said, if you start to see this, maybe you move your risk to like 1R, right, just to secure a little bit more. You move it to like 1.5R. But in this situation here today, because I had already won this sell down, I just went ahead and covered the position, okay? But you'll see as we continue to go that R multiples are the name of the game, right? And understanding that you want to get out of that P&L mindset and understanding R multiples is the key. So it's putting all these pieces together like a puzzle, right? You're understanding the higher time frame context and the direction of where the market's most likely has the potential to go. And then you're looking at it from a perspective of intraday, right? And how you can actually find edge inside of these expansions, expansion markets, right? Especially when the price isn't consolidating. So like people will be like, well, why do you trade this over like gold or silver or stuff like that? Because these redundantly produce these type of expansions to where you can find R multiples in a session, okay? And so another reason why we were, just to kind of show this really quick, another reason why we were anticipating buys off of this level was because at 847, when price came into the higher time frame area, it came into a 4-hour demand, right? So price had already hit this area, respected, which was last Friday, and bounced up. And then the shorts, as you can see here, like imagine if you shorted NQ today in that area that I was looking at first, right? If you shorted inside that area, I don't know where the coloring for that is. Let me see this really quick. Okay, so I'm trying to make it red. So let's say you shorted in here, right? And you're up 150 handles. Well, what's happening is inside this box right here is this is demand, and then inside this area, if people are short, it's either going to rip that area or you're going to see shorts if they're in a massive profit start to cover inside demand area. So that's essentially why when you're looking at the first area that we tried right here, right, to see that pop back to market open, that's essentially why we were looking at that, because we had an idea that the overnight shorts were going to cover in that area based on where the New York order or the New York Open had opened, all right? And so now that was the two moves that I had taken, was the sell down, and I took that buy up. And then we ended up finding one other move that wasn't the best, but still are multiple. Okay, so we did just get that market open, so I'll kind of go over what we're expecting for tomorrow. But then we ended up having the right time, right? 9:45, right? Last 15 minutes of the hour, first 15 minutes of the hour. 9:45, price rolls over. So like they failed to go above market open, and it started to show like we were going to start attacking down on that range. And so we came all the way down to those last 15 minutes of 9, and then you've seen price basically shoot up and shift in price delivery. And so you had a 15-minute down candle, you had price start to shoot up, and everything was like gearing up to show that it maybe wanted to go higher. And then you had this FU candle is what we call it, right? This was like a dump candle that takes out traders that were buying that area a little early and that weren't managing that area, and they ended up taking them out. So this ends up being a, sorry, I was looking for the box here. In my eyes, an institutional candle, right? 15-minute wick, 5-minute dump, which ends up presenting a 1-minute mitigation. Now for me, I had also taken a position, so I'm gonna go back to the 1 minute, in that area before this though, okay? And so I love 15 5-minute plays. So when you look at this, but without the replay mode here, so we'll go back to 1 minute here. When you look at this and how it came down into the area, this was perfect, right? And I like to frame up 5-minute edge. So before this dump, right, we were looking right here at 9:55 going into 10 a.m. If you were to frame this, right, and look for a 1 to 5, 1 to 3, we were looking to get back up to the target, right? Back above market open and back above where sells maybe came in and put their stop losses in that 24,800. And so we were looking for that. Now, like I said, this wasn't here yet, the big dump candle, right? And so how does price respond? Let's go over that really quick here as well. All right, price responded. I'm gonna do this here. I'll look for 1 to 5, and then we also had, I'm gonna move this one over here just so we can see it a little better. And then this was like a 1 to 3, just to have an idea of where that was gonna be, okay? And so what ended up happening here, right? The same scenario that we looked for earlier, right? And so to go back to the replay mode to show how this trade played out was we were looking for a 1 to 5, right? So that's like the TP up there. Price comes right into our area and we see it perfectly, right? So we're wanting to get back above this high, right? But I told myself if price presents me a 3 to 1 R, right, and I'm using 4 contracts, I'm gonna cut half the volume, go break even on the remainder, okay? So right here, we take the trade. It's the right timing, it's meeting all the criteria. All right, there, buy market, buy, boom. All right, now stop loss went at that low of day at current, but also what I used was the my predetermined number that I already have, right? And so this was a 20 handle risk right here. And then our TP, right, is going to be set for that 1 to 5 area. Now, what do we do with the 1 to 3 area? We go ahead and we put, since this is a buy, right, you're going to put a sell limit here, right? And you're going to sell half of your volume, right? So you could be doing this with 2 contracts and selling 1. You could be doing this with 4 contracts like I do and sell 2. You could be doing this with 6 contracts and sell 3. You're just cutting half the volume. That's all you're essentially doing, right? And so what you're doing here is like, okay, cool. Where are we going to take these 2 at? You're going to drag this up to the 1 to 3. So all you're seeing me do is just drag that up to the 1 to 3 zone, which was right here, right? And then we let the trade play out. So sell those 2 there, right? Price comes into our 5-minute area perfectly. And then we see the reaction, okay? Price starts to push, right? Now, we already have it preset, right? We already have it preset at 3 to 1 to go ahead and cut half this move. So I had already won this sell, right? I had won this buy, and I'm using the same tactics and same risk management, right? Won this buy, and then came in and take this 5-minute position here, and this is exactly what happens here. It tapped, right, half the volume. So what do we do when it hits half our volume? We go break even on the remainder, and I ended up putting my risk like right under that 5-minute low, and then ended up coming and taking out that position for the dump candle. Now, this kind of showed like it was going to go, and then it ends up dumping, I think, like right after this, right? Bam, and takes out the buyers that tried to buy it again. But luckily, we followed the rules today, right? Because price came into our area, price delivered us a 3-to-1. We cut half the volume, went break even, and we were able to get out of this area before the dump actually happened. Now, there was one more trade that I had identified but I did not take. Was the dump candle trade, right? So when you're looking at a 5 and 1 minute here, you have the 5 minute lower low dump on those buyers, and then this was the right timing, right? This was literally an hour after that we just seen this one. So 9:45 was this one, and then now you're coming back 10:45, and this one was happening the same exact way, and it had a draw on liquidity. What makes things more high probable for me with these type of setups is when there's a draw on liquidity. So when they go ahead and they take someone out, that's even better. Now I'm always framing up 5 minute edge and looking at 1 minute signals. So in this situation here, what we were looking for was I'm watching a 1 minute, but I'm looking at a 5 minute when I'm taking it. But when I took the entry, I took it off that 1 minute bar, so like it was like right here, right? And then I already do the same thing each time. I have a 1 to 5 potential, right? And then I also go ahead and draw my box for where my 1 to 3 is, right? Just showing you guys a visual, okay? And so the same situation was here, right? Take a trade. On that replay mode, I'll show kind of how it looked. And so it's going to be a little harder. Actually, I guess I'll have to do it on the 1 minute to show the replay. But right in here, right, you're basically in this area, and then price closes, I think, like one candle here. So to do it on the replay mode, I'll have to do it like this to get that like pretty much exact area that we were looking for was in here. And then we took the same way we took the other ones, right? So a buy market, 4 contracts is my initial volume, bam, right? And now the same thing applies, right? Now I didn't take this trade. This is the one I eyeballed because I was already up for the day. There was no reason to take this. So stop loss was exactly at our predefined number, right? Now that entry was, let's do exactly with the entry that they have here. And then this would have been our risk here. I'm just trying to make sure we can see all this. This is our risk, right? And then our TP goes where? At the top of the 1 to 5. Because if we're going to cut it, we're going to do it at the 3 to 1, right? And so now you have your TP zone, and you're playing the same way, right? You're looking for when price is going to deliver through your 1 to 3. And so now looking at this here, you're in the trade. Price starts to go in your favor, right? We're starting to see price obviously rally up. And I'm watching a 15.5 like when I'm taking this type of trade. And so at this point right here, we're starting to make, we're starting to push higher, right? So this is where we start to push higher. Now, what we need to know is when we get past this area right here. So to make it easy for you guys, and like what I like to do for myself, is I don't even think about having to pull this position. What I do is I just already have, I'm in a buy here, so I need to have a sell limit. I already have half of my volume preset to come off at that level, right? So when you're looking in that left screen right there, and then I'm looking at that right box, we want to put it at the top of that box. Now we want to make sure that that entry is the exact same here, okay? That entry is the exact same. So what's the entry on this? 678. Okay. And we want to make sure this says 678 too, because we want it to be precise. Okay. So 678, and then what was this one here? 678, 75. So we just need to add. Okay. Okay. Now we have it all set, right? And then now what we're trying to do, and we have our TP set at the right spot. Okay. Cool. So now what we're trying to do when it comes to this is we want to have our 1 to 3 already marked out. Now that 1 to 3 is going to be pretty much this 24 739s, right? So let's just go ahead and move that down here. Sorry, got a lot going on here. $739s, right? So we're trying to align it with this area here, 739s. Okay, so like this area right here, right, 739s. So now if it delivers, all we're saying is that we want it to go ahead and take 2 off, right? And so I don't know if I did that part right because of the replay mode, but essentially, like I said, you're waiting for price to get in your favor to that level. It hits the 1 to 3, you cut half the position, and then the remainder of the order. Now at this point, you don't have a stop loss, and you're break even, right? Now, depending on what type of day you've had, you could go ahead and secure a 1R. You can go ahead and secure like a 1.5R right here. You don't have to just stay break even. But I thought this was a beautiful setup to end the day, and then the day closed at 12, and top step was done by like 11:45. So essentially, if you have that understanding, you want to go ahead and condense that R as much as you can. So we had already trailed risk, we had already cut half the position, and we had already moved risk to break even. Now in this situation, when you're looking at the time coming into 11, I'd say 11:35 into 40, because they're going to close the accounts at 11:45 on the dot. You want to go ahead and secure based on R multiples up to the lowest point of the trade that you can. Okay, and so really good setups today. I thought, just really good setups overall, and I think looking for R multiples is really going to help a lot of people, including myself, because it helps you with being impulsive. It helps you with your selection on what you're looking for, and then the main thing I think most traders aren't doing, and something I learned about myself, is just your profit factor. You have to be putting yourselves in positions to where your winners outweigh your losers, right? So a lot of times I'll take some good trades, and then I'll cut my winners short, and I let my losers go to full TP, like the full against me, right? The full amount. And so what you want to reverse, and if you're having that similar issue, is you're going to want to figure out a system, which I'm showing you here, to maximize your profit taking, but also minimizing down your risk. Okay, and so going into tomorrow, just kind of what I'm looking forward to for potential. I'm going to go ahead and just move this out of the way and kind of look at the end of the day for tomorrow. Is I'm looking for more upside, right? When I'm looking at the 4 hour, I'm going to go over to that really quick. When I'm looking at the 4 hour, remember I talked about the scoop. This was the previous day low, which is now last week's low, right? And then we have previous day high, which is going to be last week's Friday high, but it wasn't the high of the week. So now we're looking at a range like this. And since we're respecting this 4 hour demand candle, right, like going across like this, I could see us build our way back up through high of day, which now is the previous day high. And through Friday's high, right? That's what I would anticipate as you're looking at specific candles going into the overnight, and then looking at this 1 hour candle. If price continues to hold, right, until New York, so New York would be right here, essentially. If price is still holding, it hasn't broke lower than the previous day low, which would be this area here for tomorrow, right? So I'm going to leave it as low a day because I have a couple notes I still got to take, but this will be the previous day low for tomorrow. Then we're going to reaccumulate to continue higher directionally, I believe, on the 4 hour to go back up into my key level, 25,000. Okay? So I hope that kind of helps out when it comes to, trading the news, as well as just still understanding the context and structure of where we're at and what we're trying to do. So with that being said, I appreciate you guys watching, and be on the lookout for the video on Wednesday that kind of goes more into risk reward ratio, how we set up these NQ trades. I'm also going to release a video that goes over like ESYM, but my main focus is when you come into the war room here coming up soon and you're an NQ trader, that you already know exactly how and we're going to set things up, and then you'll just have to basically go in and look at the volume that you're going to be using on those type of setups so that you can do your trade management very similar. So appreciate you guys watching. We'll be back again, and let me know if there's anything with the stream when it comes to the quality or the volume as I'm like looking at different screens. So appreciate you guys. Have a good rest of your day.